To know more about Nifty as situations become more serious. When situation like this arises, like now the coronavirus issues, uh, everyone definitely would like to understand what has happened in the previous cases. Yeah, 2008 recession has been very fresh in our minds, but still, if we compare even with the IT bubble, certain common things are emerging out, which will be useful for us going forward, how to address the market, how to look at the Nifty, and on a longer term basis, how to look at in future what can be the course of Nifty from a 5 to 10 years perspective or longer than that. So now let's try to understand how Nifty has performed in the last two, you may call the recession or the depression or the bubbles, whatever, in the last 20 years. This data I've taken it from a lot of websites and nsindia.com. This gives us a clear picture of the specific events. One is the 2000 IT bubble, second is the 2008 recession, and the current 2020 coronavirus issue, which all have affected the market a lot. Now the commonness what we found is whenever the P ratio reaches about 28, the markets generally go for serious corrections. And that serious corrections are to the extent of 50 to 65% in the last 20 years. Yeah, in the last 20 years, there have been only two major cases. One is the IT bubble and the recession of 2008. So the commonness is one that we need to always keep track of when Nifty touches around 28 or 28 and a half. You need to be very, very cautious, even if you're good in investing in the right stock. That will help us to safeguard our portfolio. Second is, if we again see January, February are the months where this peak out chances are taking place. So whenever it is January and February, it is worth watching what is the value of Nifty PE so that we can take care of it. The next important thing is, if you see the bottom out situation, it is always the lowest of Nifty is September here in IT bubble case and October here in 2008. So September October period is the common period where markets generally bottom out. So we have to be careful in September and October not to be too bearish. Yeah, there might be correction in that particular month deep, but a bottom formation possibility is there during this particular month during the given year. And now whenever there are corrections, there are also retracements. We'll speak about it little late, but one thing is the peaking out is January, February, the bottoming out is September, October, and market generally peak when it is about 28 and markets bottom out when it is at around P11. So these things need to be registered well within us so that when we courageously take right steps during this time, it can be very fruitful and very profitable to us. So with this, let us go a little more deeper into each and every case of this IT bubble and recession so that we can make some assumption of what can happen going forward. Now this is the IT bubble, 2000 IT bubble. The total correction has been 53%. This I've taken the topmost price to the bottommost price, and this correction has been for 1 year 7 months before the markets really turned up, and the peak valuation was 28.47 on the PE, and the trough, the lowest valuation has been 11. Nice. Now if you could see, the commonness in this is every correction, one and and 3 and 4. So if you take all this, it can be 60%, but I've taken, because there is a bounce, this chart doesn't seem to be so magnified enough to appreciate this bounce, but there is definitely a good bounce. We'll see the bounce levels and all. Now if you could see that 1, 2, 3, 4. So there has been 4 legs of corrections in this particular period, and if you see, the first leg of correction has been 33%. So when the PE is around 28, it is not a surprise to see a correction of 30-35% in the first leg. This you will appreciate once you come to the situation in the current scenario of 2020 coronavirus corrections. Let us see that later. First, 33% in the first leg, then 28% in the second leg, and again a 30% correction in the third leg, again a correction of 30% in the fourth leg. Right? Now, after a correction of 30 or 35%, there is a retracement of almost 50%. That means out of this 33% correction, 50% retracement has been seen. For example, you can see here that peak has been around 1750 to 800, 1800. It came down to 1200 to 1300, a fall of almost 500 points. And the retracement of this is around 250 points. That is where this 1550 comes into the picture. So you could see there's a 50% retracement after a deep fall of 33%. Right? Again here, after a correction of 28%, you could see again a retracement of around 50 to 60%. Again a 30% correction, and again a 50% retracement has been seen. So even if you take in terms of the price, it will be easy for you to understand there's a retracement of almost 50% of the fall. Right? Now, if I take in terms of PE, the first top PE is 28. When the 30% correction took place, the PE comes to 20. So 28 to 20 is one band of market's range. From there, a retracement again to 24 to 25 is a retracement. From there, again, a band lower than this 20 is around 17.18. So 1718 is a second band of support for Nifty here in this particular case. And again a retracement took it to around 22.78. Then again the lowest of all these two lower PEs has been 14. So we could see the band where Nifty takes support is around 20, 18, 17 to 18 and 14 to 15. Right? All these things one need to remember, because this can be the scenario for us in the current scenario also. Because whenever we see a good retracement like what we are seeing right now, we tend to think that the correction is a complete. But this shows that there is no end for the current correction. There is just a beginning in the current 2020 issue. Fine, we'll come to that. Now, once you see this correction of 30%, again a retracement, the lowest P here has been 14.57. The retracement took it to 16. Right? So now the next lowest is 12.57 PE and the correction is 30%, and the lowest PE has been 10.84, which came in the month of May. But if you see, the price bottom has been made in September, where the PE was a 12.57. Obviously, because by the time of next year, that is almost, this is a span of consolidation of more than 1.5 years. After more than 1.5 years, definitely the EPS would have come down, so the P ratio will automatically get adjusted here in 2003. So what we saw is every dip is around 30% correction, and every retracement of the correction has been around 28 to 30%, 50% retracement of the fall, and the P ranges between 28, 20, 25, 17 to 18. Again the retracement around 22. Then the next support is around 14, 15, and the final is between 12 and 11. So these are the major supports when the markets fall. And if you could see the retracements, and after the first fall, the second bottom forms after 5 months in this case. Again, the third bottom forms after 6 months, and the fourth bottom forms after 5 months again. So this is a longer period correction what we have seen in during IT bubble. Now I'm coming to 2008 recession. 2008, the total correction has been stronger than the IT bubble. Here the correction has been 64.5. The correction is stronger, but the time frame is shorter. If you could see, this is only 9 months, whereas this has been more than 1 year, 1 year 7 months. And the highest P again here is around 28.22. The lowest is again 11. So again, if you could see here, the correction has started when it was around 28 PE for Nifty. From there, again, there is a 30% correction in this case, which has pulled down to around 19.75. If you can match it with this also, it's almost the same after the first correction. So always, whenever Nifty goes towards PE 28, the correction will be deeper and stop somewhere around 19 to 20 PE in the first leg itself. So from here, the retracement is now up to 22, and again, if you could see, the retracement has been around 60% of the fall. Now from there, the deeper correction again been to 17. Let us take again, compare it here. You could see the second bottom is around P 17. Here the second bottom is also around 17, and the retracement has been same 60%, and the PE has been 19.2. That means the previous bottom has become the resistance here, right? And the third correction has been deep, which is around 51% of 4650, which is coming to 2250. If you could see, the bottom is P11. So you could see when the bottom around P comes to 11 or 12, the market stops here. The market stops here and gets into a long-term range, trading range. You could see the trading range is around 30 to 40% movement from the bottom, and this trading range maintained for almost 6 months. So even if you have missed this rally from when the PE was 11 and the market went up, you could miss it. Even if you could have missed it, there is an opportunity for the market again to come down and retest these bottoms before it really makes a strong uptrend. So you could see here the first dip, the second leg, and the third leg. Whereas here the first leg, second leg, third leg, and there is a fourth leg. So IT bubble has 4.4 dips, and 2008 correction has been 3 dips. But again, the bottom, if you could see, 20, 17 and 11. Here 20, 17 and around 11, 12 here. Before that, there is again a correction up to 15. So the support bands are very clear, and the resistance bands are also very clear. Now the current coronavirus issue. If you could see, even this peaked out around January-February period, and the PE has been 28.67. Yes, coronavirus is unexpected, but one of the important thing is it is slightly delayed in terms of its correction by more than 1 year, because this correction has been in 2000, this correction has been in 2008, and this correction should have been somewhere in 2018 or 19. But it has extended a little, and then but it maintained the January period for the correction. So that means in 2028 to 2030 or 2031, you and I have to be very, very careful and keep watching the months of January and February for a P on Nifty around 28.6 or 28 plus, so that we can again take care during that process to handle our portfolio better or safeguard our portfolio better during that particular period. So this is one good finding what we could see. Even if you want to go before the IT bubble, there were corrections in 1992 because of Harshad Mehta, right? So those again gives us a clue that 8 to 10 years or maybe 11 years, when PE ratio touches around 28, everyone have to be cautious with their portfolio. Nice. So now, as per the IT bubble and as per the 2008 recession, we can again see a bottom of P11. So if bottom of P11 is going to be the answer for this correction, then Nifty should touch somewhere around 4,500 to 5,000 going forward, which may take time to reach that particular level as of now. But if you could see, the first leg of correction has been 39.5 and the correction has been to PE 17. So if you could see, generally the first leg of correction stops somewhere around 20 in the previous cases. The second leg of corrections comes to somewhere around 17 in the second leg. Whereas in the current scenario, if you could see, the first correction itself, the market has taken it to 17 PE. That means the first and second leg has been almost completed in the first fall itself in the current coronavirus depression, right? Now from here, the retracement is what we should see. So if the fall is so much, which is around 39.5% correction, so 50% of this can be the correction which can take down Nifty from 9,100 to 10,000 range, where the PE can be around 21 to 24 after a deep correction here. And after that, it can again take a second leg of correction, which can take to PE 14 or 15, which will match with around 6,000 to 6,500 Nifty. And this fall can be around 30% or 35% correction, which can take the second leg. And after that, of this correction, there can be a retracement which can take Nifty to around PE 17 or 20, which can be around 7,500 to 8,000. From there again, there can be the final leg which can take it down to 4,500 to 5,000, because this particular situation is no less than the IT bubble nor 2008 recession. So this correction can again go deeper and reach this particular zone. Whatever is the case, 4,500 to 5,000 to 6,000, 6,500 can be the bottom where market should finally find its base before it goes for a consolidation, as we have seen in other depressions and recessions, that situations can be almost 6 to 7 months of what you call range bound activity before an uptrend starts. So now that the correction has started in the right month, around January, February, the bottom out should again happen somewhere around September, October, if we go by what we have seen in 2008 and 2000. So I hope this repetition of the situation like 2008 and 2000 IT bubble, the same will try to replicate now, or it follows the history and we see these things happening, and going forward this possibility of becoming a reality is what I am looking at. So the Nifty peak has been 12,430. If you estimate the bottom around 4,500, the total correction comes to around 64%, which again matches with the maximum correction what we have seen in 2008, right? So this is first estimate where Nifty can correct up to 4,500, and this matches with 2008 recession. Now 12,430 has been the Nifty peak, and if the bottom out takes place around 6,350, then the correction becomes around 6,080 points, which works out around 49% estimated, which can match near to our 2000 IT bubble, where the correction has been around 53%. So finally, if these are the levels what we are looking at, so if there is a change now that we have entered into April month, we will get the fourth quarter results, and the EPS of Nifty can be derived after the results are announced. Then the PE ratios can also change with the value. So if EPS changes for 2020, then Nifty levels can change. So that possibility is there. So your PE ratios can get adjusted, and percentage of corrections also can be slightly adjusted, because there may not be a major changes in the EPS, because the coronavirus issues came almost in the month of February, March, where the lockdown started somewhere in March middle. So almost the quarter has been completed. Maybe it's about 10 to 15 days of, or maybe 20 days of what do you call, a loss of business has taken place. That may not impact the EPS immediately to a large extent. That is what is my calculation. So let us hope our analysis will give some understanding and guidance going forward, and take our decisions in the right spirit, and do well, so that at the end we get the advantage of knowing all these things and move forward with more clarity. I hope these things make some meaningful analysis using 2008 recession and 2019 bubble. Thank you.